Incoming mail.
Hi guys, how's everyone doing? I hope you guys are doing great. So today we did do analysis together in our MT4, and we have seen the euro dollar and pound dollar falling. Right now, you guys, I just want to let you know the New Zealand index is falling, so probably New Zealand is a good sell. If you look at here, the New Zealand index is a little bit getting weak right here in the 4-hour. Okay, so watch out, that's something could be looking at, okay? So we're gonna start right here. So that's euro dollar, as you can see. I'm gonna put the time frame for 4 hours. So that the previous drawing I had, I'm just gonna remove this one. Then we're gonna go to the monthly. Okay, so you can see in the monthly this is a downtrend. Correct, guys? Disrespecting the technical analysis just like a computer, right? This is computer work. This is not human work. So that's the monthly trend. If we make this red, okay, guys. Really, and also when you want to draw the monthly trend, you want to have the upper and lower band for it. Okay. And one more thing is probably what you want is one at the middle. This one right here. Right. You see this area right here. That's a kind of that's other potential areas, right? So you can see in the monthly, you're in the upper band. What I mean by the upper band, right here, that was a cell, that was a cell, that was a cell. Yes, I hope the sound is good. Just please let me know if the sound is good. Sounds good, guys? Sounds good. Just okay, cool. So that's also, that was a cell, right? That was a cell. That's why I was insistent to sell euro dollar only, not to buy it at all. See that? That make a lot of sense, right? If you do come down here, you see this one? That was a buy, right? That was a buy. That was a buy. That also, it didn't come all the way down, but that was a buy. That was a buy. You can see the triple bottom right here for the takeoff. And that's in the monthly, guys, okay? So it's controlled a lot from the European Central Bank and from the Feds. You can see this is too much control. It's going perfect, like a computer-wise, right? See that? If you put one here about like this, you know this area for sure is a sell. Lately, it's been in a very small range, and the reason is excuse me, guys, for a sec. there was no much change in the in interest rates between both countries lately. Okay, really there was no much movement. So if we go to a smaller time frame, first we should have put. So when you have something like this, you probably what you want to do also, you want to draw your levels for support and resistance. So that's probably one level to watch for. Use this color like this. Okay. Here. So those are probably the low and the high for a long time. Also one level maybe. It's potential. I'm not saying that's gonna happen, but a potential. If it's gonna go break further down later on, there's potential. Okay. If you go to the 4-hour time frame, then you can see this. As long as you don't break above this one, you can see kind of reversing pattern right here, right? See, this is a reversing pattern, right? So possibly we may get a continuation of a fall here. Okay, like this. So this may be the direction that we're gonna get the euro dollar in the 4-hour time frame, as long as we're above here. And if you want to put the targets, you kind of watch the previous support and resistance area where there was some actions and spent most of the time. So you can see in this area there was a huge action being taken between up and down here, right? That's probably so one level, two level to watch for, then this one, okay? So that's potentially what could happen. The euro dollar can fall here. If it does break to the upside, then it's a different story. And stop loss should be in this area. So if you want to take a trade, then this one, and then go for here, and stop loss here, like this. That should be the sell. And for time, that should be the time like that. Should be, so maybe by the end of the month or so. Okay, so then we can publish this one right now, and you can say so EURUSD did show signs of reverse as the dollar index is reversing up at the same time from lower band of the channel. Further down is expected as long as we don't break above 1.1450. Can be trading 1.0750 soon. If potential to happen. Okay guys, so we can put this one and short it, go trend analyzer, okay, then we go like that, and just like bang. And now we have a full analysis for euro dollar. We have add this together. So higher on, higher up, hi Savage, hi Mortan, Salamat buddy. Hey, the fact, how's it going? Kiraz, thanks guys. Okay, so next we can come here and we can switch to pound dollar. Okay guys, so first what you do is you go to this weekly. So guys, some levels you need to watch for. Oh, that's too high, whatever, but still have to watch for it. Okay, then this one right here, then that's the latest high we had. That's the previous low, which had a huge candle. Okay, but then if you zoom it a little bit, and that's also another level to watch for. Okay guys, then what you do is you can zoom this just to see trend lines. Then you can say there was a trend line going right here, so that could be potentially something, right? Then you always want to take a copy out of this one down here. That's probably the closest one. Okay, if you take this off, this is a perfect down channel. Okay, if you take this part off, if you want the extreme case, then you take another one here. Okay guys, then what you do after this, you go to the 4-hour time frame. So we have a, kind of ready. So everything is ready. Now you put your stop loss right here, right? That's the stop loss. As long as you don't break this area to the upside, that's your first target right here. Okay, and that's your second target right here. And of course you go with time, you give it a little bit time, right? Then if you would call for a signal, short it and go like this. Okay, stop right here. It's not bad. We in our online yesterday we said to sell from higher price, but however now this potentially can work out good. Okay, at that price probably gonna get some bounce back. So if you go here and say pound dollar, potential for okay guys, and so really you can just like that. And you don't have to be sure about your opinion. So pound dollar did start to fall as DXY reversed up yesterday. This may continue as the safe haven currencies will be seeked, especially with the spread of the virus in China again. Okay, so eyes on pound USD and of course pound franc, right? Safe havens, and possibly pound JPY. So risk only 1% of your account. Okay, so if we short this one, pound dollar, pound dollar, pound dollar, then we can get the old ones here. Okay, so this was the old one. Then we can publish this one. Okay, so now it's published and we already got some likes here. That's in Facebook one. Okay, I put a Facebook chart not too long ago. What could happen? The gold can break up 1780. You guys, if you can see the gold, first of all, you have to go to the monthly. Remove everything right here. So we have 1915, this is the highest price ever. Put a line right there. And the loss is right here, right? Okay, then if you just come here, okay guys, so really I can say this. Okay. So we want to add some levels, 1.7. So really what we want here to 1.27. So I want 1.15. I have to here 1.15. Then I want 1.2 and I want 1.25 and 1.35. Okay, and 1.45 also. Let me get something massive. Then I'm just gonna put some lines here along these numbers because all these are potential targets. Okay, I'll just go this way right there. Like then after this we can just delete this. Okay guys, you know this has been the support. Okay, that's a very important level also to watch for, 1450 and 1480. So if you go to the gold, also if you go to channel, very relevant. I really want to catch these two levels right here. Okay. I'm gonna put a trend line right here. at the middle. It's probably one level. And copy this to the other side. Okay, guys. So gold, if we get more coronavirus and the investors are not gonna close their gold positions to take money, and if we can see another either stock market crash or just weakness, very, very strong weakness funded by the so very, very strong weakness in the stock market is just hold on by the EC like basic center banks. So gold may not fall just like last time when the coronavirus hit. The investors had to close their positions because or the hedge funds they had to close the positions because the investors they want money. Okay, and also they had some long positions in the equity market. They had to close for margin purpose, and they had to close to make up for the loss in the equity market. All these reasons did make the gold to be sold as to get liquidity, okay, to get money out of it. Then later on, it was able to get the price back very fast. Okay, so what would you expect? As long as this scenario doesn't happen again, you can see gold always does this, make a big run, then it will spend time, then very fast it will, if we make this a little bit tiny smaller, like this, okay, and you can see it's holding higher price right here like this. So I think this is gonna, for the long term, this is going to break to the upside. If you get any coronavirus new one or anything hitting, then very quickly you're gonna see the 1880. That's gonna be the first target, okay? So that's gonna be the first target. Then we may be spending some time here like this. Then later on we hit another one. And this one is gonna be fast. Okay, this is gonna probably fly up this wave right here. So watch out, guys. Probably in January 2021, the gold is gonna be trading at 1900, probably 1900. Okay, so watch out for this one. So gold may be a potential for a huge rise in the coming time. Okay. Okay, guys, so we're gonna take a break now for 5 minutes. So please, if you wanna grab a coffee or something, then we'll be back in 5 minutes. Okay guys, so we're back right here. So we can put some reasons why this we may be seeing the gold going down. So this is Russia and China central banks are buying gold heavy. Can put this a little bit lower, right? And you can make this black and we can make this white. So this will be one thing to watch here. And then so loss of confidence or decrease, but not loss. Decrease of confidence in the dollar, and there's like Russia and China, both of them want to dump the dollar. Okay, so this will make this lead to investors seek gold as historic safe haven. Okay guys, then we noticed many big investors move funds from equity to gold. Okay, the fear, okay, extended expansion in economy created a fear of potential recession. Okay guys, and also the kind of out of norm yield curve and bonds created a fear bubble that recession will happen in 2021. Okay guys, so all this stuff and a little bit more, that's what just comes out of my head as I'm talking with you guys right here. So all this stuff, it may push the gold up. Okay, I'll put you guys here. Gold rises 5% in December each year. So that's something for you guys. Okay, so the gold rises in December each year about 5%, something to be watching for. We can ask a question. Gold will go or fall to 15. I would say I think. Okay, so that's it. That's enough gold. Okay, that's probably, I put so many charts of gold here. So gold to 1830, it's probably a good one. Okay guys. If we go to something like the New Zealand
dollar. Now if we go to hour, that was still can see this down wave here. Still need to come down. Excuse me.
Okay guys, this is the 2 years yield, which is interest the government base, the US government base in the bonds. You can see it has been going up and down in the channel, so they're paying less interest in that. If it does go below zero, then this is really bad. It means at the maturity date of your bonds, you're gonna get less value than what you initially paid for the bonds. Okay, and that's not very good. You don't want to pay $1,000 and after 2 years you get $950. You know, you don't want to. So that will not be very good. However, you still get some payment at the middle, but that's the initial price. If it does go to negative, it means you're gonna get less money. Okay. Also, when is this going lower? Oh. You can see the 30 years start to pick up. Which is something good. Okay. Anyway, so I don't think it's gonna break below the zero. You can see here in 2013 when it did break. If you compare it to the Fed fund rate. The problem at that time, they start to increase in interest rate. Okay, and that's the Fed fund rate, that's the prime rate the Federal Reserve Bank would put. So you can see the yield for 2 years is going pretty much along with it, very correlated, like typical, right? And that's why this curve was going up and down. And recently, because they were afraid from the recession and all the corona and stuff, so they had lower interest rate. When they do lower interest rate, then the bonds is gonna go down, right? Then they said they're not gonna go negative interest rate. But now, if this is no plan for 2 years, he said till 2021 there's no change in interest rate. If this is not gonna change in 2 years, I don't think it's gonna stay like that. It will probably pick up a little bit, but the Feds themselves, maybe they were gonna go and buy the US government bonds, so they keep the price at least at, 0.25 to 5. I think they're just gonna do something like Japan and stuff, So maybe for the next 2 years, they're gonna keep the price between those two lines. That's it. They do want it. They will control it. They will not allow it to go beyond zero. They will be buying, and they will not allow it. Or the investors are not gonna be interested to buy past 5.5. So possibly what we get for the next 2 years, yield curve is only working in this very small portion right here. Okay, guys. That can happen till 2022, which is a long time to go, okay? Okay guys, so what can happen in those 2 years? The 2 years interest rate from the yield in the bonds, not the prime interest rate. The interest rate will not change, okay? But you can see right here, the interest rate was not changing, but the yield, which is the interest rate in the bonds, was going up, right? But here, as long this was staying flat, but you can see the bond start coming down. And once they lower the interest rate right here, then because people try to take action before the Feds will announce something. So right here, they were expecting the Feds to increase rate because the economy was doing good. So that's why they started buying the bonds. Here, they were expecting the Feds to lower the rates. So they start dumping the bonds, and so that's why the yield was coming down, okay? So if you come here, what you expect is this will be playing in this area for 2 years. Just very small amount right here. If this will go beyond the zero down here, that's gonna be very bad. Okay, so probably is not a good idea at all to see this going to the zero. I don't think the Feds are gonna be happy with this. They're gonna probably buy the bond. You know, they're gonna take action. They're gonna do whatever they have. They're not gonna increase interest rate now. They have to wait 2 years to even push it further. Okay, this would be not very smart. Okay, guys. So this is the Feds may control just like the central bank. So Feds. So what Feds? For the next 2 years, that's probably what they should do. You know? That's probably what they should do. Control it in this area. Okay. If you can compare the SPX at the same time to see how does this affect the stock market. Okay. You can see here the interest rate was going high. At that price, when they increased the interest rate, the stock market did fall a little bit. But later on, the economy was doing really good. So, and also they have quantitative easing, right? The quantitative easing QE. So the QE also is pushing this, right? So they're increasing interest rate, but that's going fine. You can see right here the bond, the yield in the bond started going down. That was probably early indication of something happening right here. Then they had low interest rate. They're trying to keep this bubble going up, you know, this stock market bubble. They were trying to keep it up. Then the corona came and just like bang, it needed a correction. Whether it was a corona or not a corona, the stock market needed a big correction just to make the technical looks good, because it was too far away from technical analysis. So many analysts they said that the stock needed a correction before the coronavirus happened. Okay, so right now, this probably the Feds are gonna keep pushing it up, okay, to maybe 3,500, just to give a false feeling to the people. This is the economy is healthy and good. Okay, later on, then there's gonna have another crash, but that's not now. Potentially not now. Okay, guys. So this we can put this one for years. So really this will be long, and this will be US2 yield. Okay, and we can publish this one. Okay, sorry about that. Simon saying he's in Kuwait. Okay, but he probably enjoying the hot heat now. You probably have a curfew also, right? Okay, guys, I put the music background down. Sorry about this. You didn't pay attention. I put it high before I left the last time. Euro dollar, we just already did the euro dollar at the beginning. If you play back the video, you're gonna see it at the beginning. Australian 200, okay.
Yeah, Australia 200 right there. Okay, so this is a channel in the long term. Okay, guys, we're gonna kind of have a look at the long term. Then you need to catch some. Of the highs here. Can we get boundaries to your movement? This is all mechanical stuff, right? You're not taking into consideration many other things yet. Yeah, then you go to a smaller time frame, then you're gonna see this a lot. Makes sense. So you guys, you can see there was a huge support here, right here in this area. So I would take this as a very strong level to watch for. Spending too much time here, it means there is whoever did buy here doesn't want to leave his position, doesn't want to close his position. So this gives you indication this is a very strong area for buyer and psychological price. Okay, so this is a very strong psychological price. Even if it does come back down, I think it's gonna just stay right here, because if it does break this one, it means those who were holding this for a long time for the first time, they did close their positions here. It means they're gonna crash very bad. Okay. It depends on what's gonna happen in China. If you're gonna get another second round of Corona, this may be coming down. Okay, this is so much affected now by the news from Corona stuff. If you get a second round, this is gonna come down here. Okay, if you don't get this second round, then it's just gonna continue going up. But I even with the second round, I think it's just gonna, if it does come down, it's gonna sit in this level for a little bit. Then later on, we'll take to the upside to probably hit this level right here. Okay. Okay, this only potentially will happen if we get another second round. Okay, so watch out for something like this. There is a very small trend line, it's going on right there. That's also probably something to watch for. Okay. But right now it needs one wave down, either to sit here to come down here, but it needs one wave down. So this is not the best buy to enter. Best buy when it's breaking this level. So if it comes down, sit here, or go inside this blue, then break up, then probably your best to buy second time will be around this price right here. Okay, that's when you want to take a buy. So it's EUS 200. So it may fall as China slowing down because of coronavirus. Okay, guys. So guys, you have to watch, because the Australian economy is so much affected to the Chinese economy, so it will be affected more with China. So pay attention to this. So guys, the Australian 200 may fall to the blue box area if China will shut down again because of the virus. A panic sell-off may push prices further down fast before it settles, and banks get in to buy the cheap prices, and central banks take action to stop the damage. Eyes on it, if China will not be affected, the Australian 200 will continue up after a small correction down. So really, I'm short in this one for now. Then later on is a buy. Okay. Just because what's happening now, but the stocks really I don't like to sell them. Yeah, I think I did this one before. No, never. Okay, first chart. Thanks, Victor. Yeah, it was a nice day today. You're most welcome, Simon. Okay, guys, so I'm gonna call it now for the day. It's about 1 hour now, 56 minutes. Euro dollar. Okay, so that's about an hour now, guys. Thanks for the likes, guys, and support for the channel. And if YouTube asks you about the channel, you know, it's informative or impressive or all that stuff. When you give a good feedback, it's really like spread the channel really strongly and recommend the channel. So thanks, guys, for joining me today. It was my pleasure. Thanks for the like and support for the channel, and hope all this stuff was in benefit for you and it will work. So see you guys tomorrow, possibly in London session or most likely in New York. Okay, guys, thank you and have a wonderful day. Okay, goodbye.